The Reserve Bank, of Australia cut interest rates again last night, Pete, and I wanted to do a little bit of a deep dive into the rate cut here, what the environment is for this Australian dollar, the price action that we saw, and what the future might look like for this commodity currency versus the U.S. dollar, but also versus some of the other commodity currencies, because Kiwi and Canadian dollar have obviously been super interesting. But you can see here over the last several months, we've been pretty flat, haven't changed interest rates going back to October of 2023. So more than a year of being flat up here at 4.35% in Australia. And they've actually held out at the high end of their interest rates better than Switzerland. You talk about them, they've cut interest rates, and you look at that.
Europe, UK,
Swiss
run
rate.
through the list, right?
Europe, UK, Canada, their commodity currency brothers, so to speak, have been cutting interest rates like mad. As you can see here, down from 4.35%, a 25 bip cut. What's going on? What have you seen anything on your board from the last 24 hours?
No.
Any news around this?
It was very well telegraphed, very well expected. What they were looking for is some guidance as to what the next one is, and it's very much now, don't know the state of tariffs, wait and see, not a lot of conviction as to, the path is now lower and we're moving lower. So we saw a little bit of flutter, but honestly, very quiet Sunday night and Monday night, and you can see the little flurry around, which really tells you that nobody had a great idea around that this really would stick it in one way or another.
Yeah.
So
projected by the market as expected comes through. Looking for something from the press conference afterwards, and you really don't get much. They do get this market back to unchanged, going, because you could see going into the event, they sold
it off a little bit. And remember, we were sub 62 cents, so we had a decent bounce in there, and they did sell it off. There was one thing that kind of moved Monday. Very quiet day, really quiet day in everything. U.S. equities, and when I say that, equity index futures, bonds, everything had very, very tight ranges. But this one kind of gave some ground, and they just basically put us back to where we were. So not a lot to make out of it. I think the move we would have had is if they didn't cut rates.
That would have been super interesting. How much would they have put back in this Aussie if they don't cut rates?
Right.
Because this is one of those, I know a lot of the forex traders out there look at, as they should, the overnight funding rates, the difference between interest rates, not only for supply and demand dynamics around these forex pairs, but a lot of that supply and demand dynamic comes from the interest rate differential and how much someone might be paid to hold long U.S. dollars and short Aussie dollars, or have to pay to be long Aussie, short U.S. if the gap between their interest rates is going to widen. And so, if they don't come out and cut, the U.S. is already at, I think we're at 4.25 to 4.5, right? And so we're right in the range that they were at going into this event. And so if they don't, it's a surprise no cut. Maybe you see that Australian dollar catch a bid because they've probably already priced in this cut, and the idea that, okay, now the overnight funding rate is going to skew closer in the favor of the U.S. dollar here, and how that affects supply and demand. But until they get down to, the 3 handle or 2% or anything down there, closer to Japan or some of these places where the carry trade is really a factor, it's pretty much a scratch right where it is now.
I imagine we'd see those swap rates on either side of zero. So
exactly. Really a push for the moment. But something that is interesting outside of the actual movement from the interest rate decision The overnight funding rates, of course, you can take a look at that stuff and how it's changed now that the rate decision has gone through. This bounce over the first couple of weeks here of February. We're midway through the month, and it's been, since the start of the month here, a pretty straight shot from they break 62 cents, get all the way up last week, looking like they're going to head towards 64, and opened higher on Sunday, it looks like, looking for 64 cents, backing off a little bit here. How much of this is tied to, though, Pete, the interest rate decision? We just went through all the dynamics. They kind of ended up discarding it. It was one of those events where what happened is what was expected to happen. No real color from the press conference, very even. We might cut more, we might not. We're data dependent, X, Y, and Z. How much of this is tied to just risk on sentiment around Australia, China, et cetera, but also globally? I mean, you have a market right now where S&Ps are higher on the session. Is that holding this market up a little bit, some of the risk-on tones that we've seen the last couple of weeks here?
Absolutely. I think we look at, the Chinese large caps, whether you're looking at an ETF like FXI or Baidu or JD, all substantially off their lows. Now, are they anywhere near where U.S. tech is? No.
For the last couple of years, no.
Right. Absolutely not. So is that helping? Absolutely. The fact that the interest rate cut is done and parsed and there wasn't really anything outstanding, what we're seeing is finally some positive tape action where we're holding on to rallies. And yes, we pulled back a little bit like we did Monday. We spent the bulk of that day, though, still at the higher end of where we've been recently. And that's a little bit of constructive tape action. So we're starting to see that some better activity, albeit much smaller ranges. Now, we were living in that wonderful world of 100 pips up, 100 pips down. That whole rate announcement was 30 pips on either side of that one little candle. So this isn't unexpected to see the market digest, kind of come off the lows. Very rarely do we get a spike low like we did, sub 61 cents, and we're right back to 66. The market does do that way. It kind of will run a little bit here and give you a little bit of, extension and then pull back. So I think we probably are seeing this play through a little bit. Different currencies at different times. Pound was a little bit different yesterday. Euro was being sold while the pound was being bought. And again, attributed it to, the UK had said that they're willing to send troops to Ukraine. Don't get caught up in that news cycle of that kind of stuff.
Well, it'll be interesting to see with this Aussie piece as we head into this shortened week. Because, you see plenty of times where they tried to take this market lower. It was able to fend off that selling and close the week last week higher and start this week around unchanged after some of the upside they saw Sunday into Monday. But for this week will be really interesting. If we close higher than 64 cents here, one, that those are really the highest prices that we've seen since mid-December. And two, I think that would be another feather in the Aussie cap here of confidence that we don't take a trip back down to 62 cents. Because, to your point, plenty of just little price action pieces that are building a little confidence in this market.
So what do? We bring down our expectations for everything we're looking for is, I can't get in until I get a 100 pip range. Market's not presenting that opportunity for it. So you're either going to trade a little bit less or you're going to bring in your expectations to be a little bit realistic. Sounds pejorative, but just
what the market is.
What the market's giving you right now. I think long term, we've seen some serious damage now from 70 cents down to 61.
Yeah.
All those longer term shorts really have not been challenged in any of this process. Now we're getting into the area where it might be a little bit interesting. That some of the longer term shorts are going to be challenged. And that's where we possibly see a little bit of these extensions. So for me, this is a week where if we go out at the end of the day near the highs, I'm not going home short. If we I'll be willing to trade both sides intraday, but be mindful that if we go out near the highs on a quiet rally up to new levels, chances are they're opening up in Asia. They're higher, and maybe all those downdrafts we saw on the way down, you can expect to see some updrafts as people cover on the way out. So think about it that way, a little bit around timing. Kiwi still has some catch up to do. It still has been the laggard there, but we're seeing a little bit more of currency specific stories, less dollar stories.
Yeah,
so
it's nice.
We adjust our trading and we move to the markets that are most interesting.
Yeah, we'll take a look at some of the crosses later on in the week.